Global shifts, local impacts. We connect the dots so you don't have to. From the BizNews studios, welcome to BizNews Daybreak for Thursday, the 5th of February, 2026. I'm Alec Hogg. Here's the context you need to win the day. More developments in Iran, but most of the overnight news focuses on action on Wall Street, including some terrific numbers from Alphabet, aka Google. Here's the headlines from our partners at Bloomberg.
The U.S. and Iran are set to meet in Oman on Friday to discuss a nuclear deal. Even so, President Trump sent a warning to Iran's leaders as U.S. military forces entered the region. Here is Trump speaking exclusively to NBC News.
I would say he should be very worried, yeah, he should be. As you know, they're negotiating with us.
I know they are, but the protesters have said, where are the Americans? You promised them we would have their back. Do we still have their back?
Well, we've had their back, and look, that country's a mess right now because of us. We went in, we wiped out their nuclear.
So that's the question, if we wipe them out...
We have peace in the Middle East. Yeah. If I didn't take out their nuclear, think of it, if we didn't take out that nuclear, we wouldn't have peace in the Middle East because the Arab countries could have never done that. They were very, very afraid of Iran.
Yeah.
They're not afraid of Iran anymore.
President Trump speaking with NBC's Tom Yamas. Now, earlier today, the U.S. said it wanted to discuss other issues with Iran. However, Iranian leadership wants to limit discussions to its nuclear program. Alphabet's fourth quarter revenue was above expectations. However, the company also said it plans to spend far more than investors had anticipated this year. CapEx is set to double in 2026. Here is Bloomberg's Caroline Hyde.
They are dialing this up because they must feel, it must be taken that they've felt from the market, you've got some bandwidth to do this right now. Because what we've heard time and time again, think of Microsoft's numbers, is that their issue isn't one of demand, it's one of supply.
Shares in Alphabet were down by something greater than 1% in late U.S. trading. Qualcomm gave a lackluster forecast for revenue in the current period, and the outlook only added to concern over component shortages and how that may drive up prices and in turn hurt consumer demand. Qualcomm is the largest maker of smartphone processors. Here's Jay Goldberg from Seaport Research Partners.
So I think there's a near-term problem and a longer-term problem. The near-term issue is memory. Memory prices are expensive. That cuts into everybody's margins. That's going to eventually cut into consumer demand. Phones will be more expensive because of the memory. It's a well-known story. So I think that's a near-term headwind. Longer term, I think Qualcomm has some pretty significant challenges, and I'm not sure they're ready to address them yet.
That's Jay Goldberg from Seaport Research Partners. Shares in Qualcomm were down by more than 9% in late U.S. trading. The sales forecast from the British chip designer ARM Holdings was disappointing, and right now U.S.-listed shares in ARM down more than 6% in late U.S. trading. In the equity market, the appetite for risk was diminished, and the rotation out of tech shares gathered momentum. Software firms were caught up in another wave of selling, but chip makers saw bigger losses. We had the Philadelphia Semiconductor Index down 4.3%. Now the NASDAQ 100 dropped nearly 1.8% and breached its 100-day moving average. That is a level seen by some analysts as a harbinger for more losses. Here is Sarah Hunt, Chief Market Strategist at Alpine Woods.
The market was coming into all of this on fairly high levels and had a lot of expectations. And even if you're meeting some of those, it's not good enough in an environment where people are starting to get scared again about what is going to get disrupted by AI.
The chair of the Wall Street firm Paul Weiss is stepping down. Brad Karp resigned after a trove of emails detailed his close connections to disgraced financier Jeffrey Epstein. Scott Barchet will now lead Paul Weiss effective immediately.
There's a lot to digest in the Alphabet numbers, from the massive hike in its capital expenditure, which signals a splurge on data centers and a big vote of confidence in artificial intelligence, through to driverless car subsidiary Waymo getting ever closer to a full-scale launch. Analysts are sure to take their time to fully appreciate what's inside the financial tin for the quarter to end December. But AI bull Dan Ives of Wedbush provides context. He spoke to Bloomberg Businessweek late last night.
I think it solidifies what's happened in this AI revolution. I mean, look at the spending, look at the monetization, and look, it goes back to look at this tech earnings season. Palantir, look at hyperscalers last week. I think to some extent, in terms of like this white knuckle, this nervousness that we're seeing, it just further solidifies the spending, the monetization, the cloud, the moves that enterprises are making.
Why did we see shares move all over the place? 7.5% was the initial reaction to the downside, and then you saw shares turn positive, unchanged. What's going on with the instant moves?
I think these knee-jerk reactions, especially when you're looking right after the print sometimes, I think a lot of times they're misguided. You got to listen to the conference call. You got to see ultimately what, when you kind of peel away the onion in terms of guidance as well as CapEx. But look, I think it's very easy to get caught up in days like today, right? In terms of, or just even so far we've seen in terms of the last few weeks in tech. I think it's very important. What's the narrative? Is spending there? Yes. Is CapEx accelerating? Yes. Are enterprises moving full steam ahead? Yeah. Look, and I think that's keys to the puzzle.
In your view, is this increased CapEx versus expectations for NVIDIA and Broadcom?
It speaks to the narrative that we saw with Microsoft, that we've seen with Meta, we've seen across the board. It just further speaks to this arms race that's playing out across AI. And then when it comes to CapEx, look, obviously AMD stock sold off, but again, this is like Rome wasn't built in a day. You got to think about this is multiple years, 3-4 trillion that's going to be spent. This spending is unlike anything I've ever seen.
Despite those blowout quarterly numbers, Alphabet's shares whipsawed in the aftermarket last night. They were down 7% at one point before stabilizing to finish a net 2.5% lower on the day. Palantir lost recent gains and more as it joined the software stock apocalypse, falling almost 12% last night. But Apple was a standout in a sea of red ink. That was up by 2.5%. BizNews portfolio holding Chubb was a delight for us. It came out with quarterly numbers that massively beat expectations, and the share jumped 5% on a very weak day for stocks on Wall Street overall. That's good stuff. On the local market, the rand followed gold lower. We start the day at 16 rand and 16 cents against the US dollar, long way from the 15.50 we were looking at just a week ago, but that's primarily because the gold price is really dragging the rand by the nose. Gold starts the day at $4,900, having lost some of its recent strength. Bitcoin's downward spiral continues. The crypto coin dropped 7% last night. It's now at $71,000. That's the lowest since October 2024. The crash in the price of gold and silver that happened in the past week is being ascribed by most commentators to Donald Trump's appointment of a new Federal Reserve governor who apparently is not going to increase interest rates but only cut them. Well, Mr. Walsh has got quite a few hoops to jump through before he gets appointed to the Fed. He's only Trump's appointment, so he has to go through a whole process, a whole committee process, and not everybody is a fan. So that seems a little far-fetched. I much prefer Peter Major's analysis. Here's the relevant part of the Mining Web Weekly show.
Apparently, the Chinese Commodities Exchange increased margins on gold, silver, and copper by 80%, which means almost double. So if you were investing and you're managing your money, you say, I'm going to go long and I got enough for a margin call. But if the next day you're told you have to double the margin, maybe you can't make it, or maybe you don't want to make it. Doesn't matter. That panicked everybody much more than Mr. Trump's appointment for Federal Reserve, Mr. Walsh. That may have helped do it, but I think it was mainly the margin requirement, just being out of the clear blue sky. And yeah, there's a few bunker hunts. The Chinese love gambling. They love speculating. And they were the ones that were really pushing this from 90 to 100 to 110, 120. It wasn't Joe Dokes in Johannesburg and New York. It was the Chinese. And they are looking for a Mr. Hat. Apparently, Mr. Hat was taking the biggest positions, and he owes over $150 million of unpaid margin to a lot of brokers. They think Mr. Hat has left China. He'd better have left. I don't know how real Mr. Hat is, but the things I'm reading and people I'm talking to say he was probably one of the big protagonists. But that's what I believe brought it down, Alec. It may have been accelerated by Mr. Trump's appointment of Mr. Walsh, but I think it was the margin requirement increase, which is along the lines of what happened in 1980 to the Hunt brothers.
Robertson, a small town in the middle of nowhere where a wine farmer claims to have sold a Volkswagen up to WeBuyCars. A farmer. What car did you really sell them?
A VW up.
Right here in Robertson.
Small town, but we know about WeBuyCars.
Yeah, but what's a farmer doing with a VW up?
It was just a runaround.
Cool cover story. And I see you traded it in for this, like a double cab Renault. Were they all out of ranges?
WeBuyCars, the easiest way to sell your car by far.
The big story on the political front locally is John Steenhuisen's confirmation that he will not stand for re-election as the DA leader. He says he needs to focus on a national crisis.
This is not the end of the road for the DA, and it's certainly not the end of the road for me. The way I see it is that there's an important next mission that beckons for our party, and that is to build upon my legacy and the DA's success in the GNU in order to turn our party into the biggest party in South Africa, so that we can lead future coalition governments at local, provincial, and national level. But, ladies and gentlemen, that is a mission for the next DA leader. Because I now have another mission, and it is urgent. For the rest of this term of office, I will focus all of my time and energy as Minister of Agriculture on defeating the most devastating foot-and-mouth disease outbreak our country has ever seen, and to pursue the mass vaccination to ensure that this is the last mass outbreak of FMD that our country ever sees. After leading the DA into the GNU, my next chapter must be to eradicate this devastating disease from our shores once and for all. And that, I'm afraid to say, is not a part-time job.
39-year-old Cape Town Mayor Jordan Hill-Lewis is odds-on favourite to succeed his friend Steenhuisen at the leadership election for the Democratic Alliance in April. But he's far from home and hosed, as we say in the racing game. There are sure to be internal candidates, including Deputy Finance Minister Ashil Sarapin, who has quite a lot of supporters, and then perhaps even an outsider with a huge following. There's much talk on social media about Rob Hersov entering the race, with Hersov 2026 poster images now being distributed quite widely on social media. Rob Hersov, who's an early riser, says it's a lot of bunk. He responded to my query this morning, pre-dawn, saying, no, there's no truth in the social media chatter about him standing for DA leader. He has zero interest. He says the DA is too lefty for me anyway. My values are more aligned with Freedom Front Plus. Put that in your pipe and smoke it. Another big story of the past week has been how Elon Musk is packaging part of his empire in a $1.25 trillion company. Here's our partners at the Financial Times with the host of the FT News Briefing, Mark Filipino.
Elon Musk is, once again, getting ready to burn through a mountain of cash to pursue a big dream. Tech's best-known visionary is gathering his resources, and he's going after what he sees as the next big prize: robotics, AI, and space. Here to discuss is FT Tech writer at large, Richard Waters. Hi, Richard.
Hello, Mark. Great to talk to you.
Good to have you back. So what exactly is Musk's next big project?
So Musk is combining two of his biggest companies. The Muskverse, as people like to call it, is this collection of loosely allied companies. He's putting together SpaceX and XAI into a single unit. XAI, which competes with OpenAI, Anthropic, building these large language models. And he's ramming that together with SpaceX. And he's saying, the reason I'm doing this is I've got to put data centers into space. That's the only way we're going to get the energy we need from all that solar energy up there to power the next move in AI. So it is really a monumental thing.
And this is on the back of a larger announcement from Tesla from last week that it's going to be moving away from cars and more toward AI and robotics.
Yeah, so Tesla is really doubling down now on what it believes is its own future, which is robotics, either robo-taxis or humanoid robots. But at the same time, while it's doing that, XAI is building the AI, wants to get into space. So you can start to pull all these pieces together as people are and say, well, hang on a minute. If we got huge data centers in space generating AI, and Tesla is the hardware arm, if you like, of the Muskverse, creating all these robots, well, it all ties together, doesn't it, in some way? It's a really gutsy kind of Elon classic move. And will it sustain enough investor interest? We'll see.
Why now, Richard?
So I think you have to start with the financial logic here. Musk has a track record of folding companies that don't really have a future into other companies that do. He did it 10 years ago with Solar City, which was a struggling solar panel maker that he was a big shareholder in. He folded into Tesla. He did it last year with X, the former Twitter, and he folded that into XAI. And now XAI itself, which is on one level horrendously successful to have a valuation so high after only 3 years in business. Yet it's not clear what its future is because it's competing with much better funded, much more advanced companies like OpenAI, Google. And so folding that now into SpaceX is a real exit, if you like, and an obvious next step.
What are some of the concerns about what Musk is doing?
The new SpaceX, if indeed it is worth the $1.25 trillion he's now saying, if you add that together with Tesla, he's playing around with $2.5 trillion of market cap. What he doesn't have is cash flow. But with that market cap, he has the chance to raise money. So SpaceX is lining up a $50 billion IPO later on this summer, by far the biggest IPO of all time. We can almost now see that as a down payment on what's going to come next because Tesla needs to raise a ton of money. Tesla has said it's going to more than double its capital expenditure this year. So the entire Muskverse is going to need recapitalizing in some way. And I think that's really what Elon has his sights on here.
So, Richard, what are you looking out for next when it comes to this story?
Yeah, I think combining XAI and SpaceX is obviously a very significant move. Taking SpaceX public is the next big step. And this is where it gets really interesting, Musk will then be in control of two very large public companies, and his room for maneuver will start to narrow, as we saw when he bought out Solar City a decade ago, and that was only a $2 billion transaction. He was tied up in lawsuits for best part of a decade over that one with unhappy shareholders. And I think that's why there might be some caution on the part of Tesla investors, because what is the future for their company in this emerging vision that Elon has?
As you heard right up front in the news headlines, lots of developments now on the Epstein files, given that a lot of new information was released over the last weekend. Investigative journalist Jason Leopold at Bloomberg has uncovered something startling: confidential, suspicious activity reports from the U.S. Treasury's Financial Crimes Unit. And that opens up a whole new avenue of inquiry. These are usually impossible to obtain, but the leaked documents map out how banks flagged Epstein's money movements as potentially laundered a long, long time ago. In this clip, Leopold explains why these reports are a roadmap to understanding Epstein's financial web and the questions they raise about who was watching.
How should we look at those particular documents? What do they tell us? What don't they tell us? And do these files indicate what the FBI did with those tips that they received?
The FBI documents there are interview summaries. So there's interviews that the FBI conducted with people who may have been witnesses, who provided information to the FBI, confidential human sources, essentially informants. And then there are folks that just called up the FBI, offering up tips, and the FBI memorializes this in a document. That's what we're looking at. And none of those records are something that you can rely upon in terms of verification, because it doesn't appear that the FBI followed up on it. And if they did, we're not seeing the records in here that states, that they did follow up on the tips or that they investigated any of the allegations that were being made. And that's one of the problems with these records, right? Is that we have 3.5 million pages of records, millions of pages of emails, but they're completely out of context. So when we're reporting it, we're actually going out and doing additional reporting, right? To understand what it means, what happened in this particular time frame. So there's lots of FBI documents that contain allegations against President Donald Trump, but we don't know if it's true.
You mentioned your interest in following the money, Jeffrey Epstein's money, how he made it, how he used it. Any more specifics on what you have learned from this cache of documents or what you are learning about that?
What I'm kind of blown away by from reviewing the documents thus far is the inclusion of suspicious activity reports from various financial institutions. And the suspicious activity reports comes directly from FinCEN. FinCEN is the Financial Crimes Enforcement Network. It's part of the U.S. Treasury Department. And their job is to combat money laundering and other financial crimes. And so financial institutions, whenever they see signs of money laundering or financial crime, they send over to FinCEN a suspicious activity report. FinCEN then puts it into a database here. Those are impossible to get, first of all. You can't FOIA them. They're never usually introduced in court cases, but there are a whole bunch of them here in these files. They come in around 2019, and they show how some of the financial institutions, flagged Epstein's movement of money. And there's a lot of it there. And to me, that really stands out as a noteworthy document because it provides a bit of a roadmap to understand, one, how he was moving the money, why it may have been suspicious, and potentially following it up in a much deeper way.
Yeah, those Epstein files are getting curiouser and curiouser. One thing that has, though, really come to light is that it seems anybody that Epstein had in his black book or on his contact list is now suddenly suspicious. You can't do that. This guy was a fixer. He made his fortunes by connecting people together. Not always people he knew well. You see Elon Musk getting into trouble for pinging Epstein at some point in time and saying, hey, I'm on this island. You're the man who organizes the parties. Have you got a good party for me? I need to let my hair down. So suddenly Elon Musk has now got a big question mark over him. Same with Richard Branson, who had some seemingly innocuous interaction with Epstein. So you got to be careful about these things. But there are some people who were really deep into that area of darkness. And that's coming out, and it's coming out fast. And there are South African connections for sure. Epstein loved Cape Town, apparently. Well, now you have the edge. For the full interviews and details behind these stories, head over to biznews.com. I'm Alec Hogg. Thanks for starting your morning with us. Now go and seize the day.